Dun, dun, dun. Today is the day, ladies and gentlemen, of the CPI print. This video will be coming out half an hour before it. It will be at 1:30 p.m. UK time, which I think is about 8:30 a.m. Washington time. And we're going to be looking at what you may or may not want to be expecting. We're going to look at some JP Morgan comments. We see the market is relatively green in anticipation of this. And I think this is largely because most, or the consensus for the CPI print is round about 7.3. So most people, most sort of top analysts, JP Morgan and such, are predicting a lower CPI print and potentially a CPI print that if it is below 6.9, we'll see significant upside for the stock market. And we're going to talk about that because we spoke about the stock market. I'm under no illusion that even if we do get a rally here, it will eventually fail. And we've really been sort of looking at the rally that we had from 15,600. And we've been saying, look, we've been chopping it up and saying, look, there are levels higher than this that you may reach. And this may be the catalyst for it if we do get that lower CPI print. So today is going to be exceptionally important. I am not going to position into today. I'm rather going to wait and see what happens. It's always very stressful if you're not already in a position. Let's say you got short up here, you may want to hold it. But to position down here, you're going to get a lot of volatility going into this in the next hour or so, and then coming out of it. And then we've got the FOMC tomorrow, which they're going to deliver a rate hike. And then we've got rate hikes coming from the Bank of England and the ECB, the European Central Bank, on Thursday. So it's going to be crazy, guys. So let's just focus on the main sort of event today. We'll look at the stock market, Bitcoin, of course, the dollar, and a number of other markets. Gold's having quite a good day today after a bad one. So let's take a look at it. This is JP Morgan's trading desk office that is offering a game plan for investors in regards to the CPI. So they're saying if we get a 7.8 or higher, which they're giving a 5% probability to, you're looking at the S&P to sell off around about 4 to 5%. A 7.5 to 7.7%, which they give a 25% likelihood of. You're looking at it still going down. And if we get a 7.2 to a 7.4, which is they're giving a 50% probability of, you're looking at an up day of 2 to 3%. And then if they see, let's go to the bottom one, which they give a 5% likelihood of, a 6.9%, which would come out massively under consensus and expectations. They think the stock market will have around about 8 to 10% rally. I was actually looking at this last night because I was actually trading the markets. Stock market actually closed in the green last night. And this is why it's just so hard to trade these events. JP Morgan come out, stock market pumps off the back end of it going into the close. Markets are very much programmed to do that, I think. So really, we're going to have to wait and see what comes our way. The last one that we had for October was 7.7. The consensus for this one is 7.3. And the TEF forecasts, or the TE forecasts, is 7.6. So depending on what number we get is going to depend on what the market does. And it's likely to do, as it always does in this kind of event, this sort of a movement when we get the CPI print, and then it will find a direction either to the up or the downside, obviously based on what the print is. Not something that I'm interested in positioning into from a day trading point of view, because I find it very hard to apply good risk management to a trade unless it's spot with any kind of leverage on these events, because you tend to find that stops get ran to the up and the downside. So I'm really just happy to wait and see what comes out of this. I like the JP Morgan forecast. This was all credit given to Gavin here. He posted this, but of course this would have been posted by JP Morgan. On the topic of inflation, interesting tidbit from NFIB Small Business Survey for an inflation day. The net share of small biz owners raising prices increased for the first time in 6 months by 51%. I do not think that inflation is over, ladies and gentlemen, and I think it will re-emerge in the kind of environment that we're in. You know, we looked at, or I looked at with my patrons, BlackRock's forecasts for inflation, and they're essentially predicting a further demand destruction that essentially is going to cause GDP to sell off by about 2% to get inflation where the Fed want it, and that I think is going to have negative repercussions across the board. So I'm under no illusions that the market may rally higher. But in my opinion, this is just going to provide great shorting opportunities for myself. Goldman Sachs asset managers, we'll deal with this a little bit later on because they're talking, you know, we looked at Mike Wilson's comments from Morgan Stanley. And he essentially said that, look, we're in for a bumpy ride. You know, I can see the stock market being higher than it is currently next year. But the likelihood of it is it's going to go down before it goes up. And actually sticking on here, you can see that stock market's very much getting a bid around about that 30 MA. We had said that you typically always, and we thought this may have been it, get a bounce around here if you look at the previous times. You know, we looked at this as well and said, is it really that simple? You know, when Morgan Stanley called him because they had sort of reached this upper trend line. And ultimately, you know, now looking for that downside now that they've taken their longs off. Potentially that's still in play. We looked at the VIX on top of this to show you the correlation. Of course, VIX is at a low point. Stock market at a high. Obviously, this is the inverse correlation. And the VIX is now moving up. The stock market isn't massively reacting. So if the VIX continues to climb, expect the stock market to fall. It's all really going to center around today's CPI print, which is why it's a hard day to trade because we don't know what we're going to get thus far. We can see actually, if you look at the Eurodollars futures, this is actually now pricing out interest rate hikes, having had them priced at over 5%, round about 5 point. We'll call it 7. We'll call it 5.22 roundabouts, and they've now got them, you know, under 5%. Which would be in line with what the Fed has sort of forecasted in regards to a 50 and a 2.5 in February. So they are likely to do a 50 basis point rate hike. But I think that's very much given. But the CPI print may encourage people to sort of think that, look, the Fed are going to now reverse, you know, or not reverse, but be a lot less aggressive, and markets are going to benefit from having a reallocation of liquidity sort of back into them, having known that it doesn't need to be sidelined, ready to service an over-indebted debt market on a corporate, you know, federal and so on and so forth level. So this is the game that we're playing right now as investors. You know, we're waiting for this regime to end and a new stimulatory one to begin. And that is not here yet, guys. And I think the Fed are actually going to keep their foot, along with other central banks, because there's a sort of FX currency battle going on at the moment, on the turkey's neck for a little bit longer. And I do see more downside to come. And I actually think that we are moving into, you know, if you look at the yield curve, an event that is pretty going to be pretty severe in terms of a Lehman's moment, that they're going to blame a recession on. They're going to say, oh, we could have had a soft landing, but this happened, even though it always looked very much unlikely. And, you know, like I say, BlackRock are very much saying, look, a recession is foretold based on what the Fed are doing. But markets may get a bit of a bid on this lower CPI print today. So it's really all to say in regards to today's market. We can do a little bit of short-term TA. I'm not a fan of this structure. I actually drew for my Patreons this morning kind of how I think this plays out. And I wouldn't be surprised to see it play out in this manner. We're already sort of validating that from this morning. You know, I think you are essentially... Where do we want to take this? Let's get this right if we're going to do it. So I'm going to ignore the wicks, and I'm just going to use the candle bodies. You know, it's very actually common in a rising wedge, before it does break to the downside, that it will do some. So I did do a draw for my patrons where I said, look, expect something like this. And then maybe you get that downside as we go and progress into the week's data. I still think that's a possibility. You know, we have always said there's definitely, from this rally down here all the way up to here, we have said, look, there is definitely the possibility for continuation to the upside. Targeting, you know, 18K would be a nice one. Yeah, 18 sort of 2, and then looking for all this liquidity up here. And there's even a possibility that we retrace this. I just feel personally, from a trading point of view, that I am not interested in longing this whatsoever. I think it's too risky in regards to risk to reward, and I think there's a lot less probabilities of it playing out given everything that's going on. One bit of bad news could really throw markets in a wobbly sort of way. Certainly crypto right now, there's a lot of Binance FUD and so on and so forth. A lot of stable coins coming under a lot of scrutiny. I think it only takes something negative to come out for this market to reverse this. So for me, really, I'm just looking for shorts. So we'll look for areas like here. If we do get a rally, this would be a nice one for me. And then we'll put in short positions accordingly. Maybe look to actually swing short it depending on what we're looking at. But we'll see what happens. We'll look at, if there's any fair value gaps on the way up, and sort of take it from there. If there's any sort of reason for us to suspect that a short is going to play out once we get to these high levels. But I'm not interested in stopping a move to the upside and sort of preempting it. I'd rather wait for the structure to present itself and show me that it's going short, rather than looking to just, guess where this is going to top out if it does. The alternative really, I guess, is if the CPI comes out bad and everything starts to sell off, well, look for your levels, guys. This would be a pretty good one. And then, of course, you've got this one where we initially had that short squeeze that you're really going to be looking at. So you're looking for sort of 16.1 down to 15.6. So you have got this potential scenario. Maybe you do something like this. But just as equally, if CPI comes out negatively, I think you're going to get a lot of sell pressure that's really going to take things down. This would sort of line up more so with the S&P and where it's at. And the fact that it is now looking like potentially it wants to sell off. It's going to be a very volatile week ahead of us. Crypto thus far, we'll get rid of all the draws. It's doing very well. We had this sell-off in sort of Monday, probably people getting out of positions. Let me actually just take a look at Bitcoin open interest on Binance. I'd like to see what this is doing. Yeah, you can see people have taken positions, so they're probably de-risked. We looked at this going into CPI, exiting positions, de-risking across the board, and now you can see a real uptick in those positions. And open interest drives the price, ladies and gentlemen. It's really, people opening contracts short or long. And you can often, if open interest is doing this, and the price is doing this, that they're longs that are entering the market. That's all I've got for you in this video, guys. You enjoyed the content, like is always appreciated. So is a comment, and I look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching, ladies and gents.